Welcome back. 44% are bullish over crypto AI token prices, and we are on this channel as well. In today's video, we're going to be talking about why you are probably not bullish enough. We're going to go through Federal Reserve data on where the money supply is, where the money supply is going, what this means for the crypto ecosystem, and really where the money is flowing, and from a regulatory front, why this regulatory regime is very, very different from the previous, and I don't think that the market has fully priced all of this in yet. And so we're going to be starting right here with the Bitcoin rally is incoming, M2 money supply rebound signals, big moves ahead. And don't forget to give this video a free thumbs up. We upload as much as possible to bring you the latest happening in the financial world. Hit the subscribe button, that way you never miss a new video. And if you want to help support the channel, click the join button down below to learn more about becoming a channel member, or you can always leave a super chat down below. Anyway, we're going to be starting right here. M2 money supply. What is the M2 money supply? Well, beginning in May of 2020, M2 consists of M1 plus small denomination time deposits minus the retirement funds, balances in retail money market funds, less retirement funds as well. And so basically this is the money that is in the ecosystem of the economy here in the United States. And basically a general kind of understanding of this is when the M2 money supply is expanding or growing, more money is being injected into the economy, and then you're going to start seeing more spending. We also have to understand the velocity of money, because the velocity of the money is also important, because if we zoom out the velocity of money chart to the 1960s all the way to today, you can see that we are basically at the lowest point that we've been since 70 years or something like that. And so when we're talking about velocity of money, this means the rate at which money is moving through the economy, right? It says the velocity of money is the frequency at which one unit of currency is used to purchase domestic produced goods and services within a given time period. In other words, if the number of times $1 is spent to buy goods and services per unit of time, if the velocity of money is increasing, then more transactions are occurring between individuals in an economy. Now, I would imagine a lot of this also has to do with the fact that most of the money is going to, large corporations. A lot of Amazon product comes from China, so most of that money is going overseas. And so this could be big potential of why we've seen this money decline, but the velocity of money has been declining since basically the 90s, and that is a pretty interesting concept. What happened in the 90s? Well, we had in the United States the first surplus in quite a while. And since then, we've been in debt. And now what we're trying to do, or at least what the administration is trying to do with Doge and some similar type deals, is really balance the budget, get things in order, repay off some of this debt that we're seeing here. And so, yes, we have to keep our eye on the U.S. money, M2 money supply. You can see that here on the debt clock as well. So basically, according to an X post by a crypto analyst, a rebound in global M2 money supply holds the potential to reignite Bitcoin's bullish momentum. The analyst explained that M2, a leading indicator, often predicts significant shifts in Bitcoin's price trajectory. For the uninitiated, M2 is the measure of total money circulating in the economy. It's a key indicator of liquidity, influencing inflation, economic growth, financial markets, including emerging assets like Bitcoin. And now keep in mind, right, you may be saying, but a lot of people are broke right now, or they don't have any cash. Well, yes, but we also know that Wall Street and the millionaires and billionaires have been going to cash over the last, 6 months or so. I mean, we even have seen the Ethereum ETF outflows extending to 12 days, meaning for 12 full days, Ethereum has outflowed. Money has moved out of the Ethereum ETFs. And when money moves out of the Ethereum ETFs, Ethereum is then sold on the open market. And so, yeah, I mean, obviously this could have significant potential to push the price down and cause some bearish sentiment in the market. But when we understand the fundamentals, and this is why I keep saying we're going to go back to fundamentals. Like meme coins have no fundamentals. They're not actual investments, right? It's more of like gambling or betting on a sports team, right? Just fun. It's not actual investing. And investing is going back to the fundamentals of what these ecosystems can do and what the technology can do for the world. So diving a little deeper, master of crypto, this crypto analyst noted that historically M2 movements tend to predict Bitcoin's price momentum with a 70-day lag, just over 2 months, right? The analyst added, recently as M2 began to rebound before Bitcoin, it's now fully recovered and poised to hit new peaks, suggesting Bitcoin might do the same. Analysts have insights on why this upcoming Bitcoin rally could surpass all the previous ones. Another analyst echoed these views, highlighting that Bitcoin may experience another price rally after a brief period of dip and consolidation. Crypto analysts provided further insight, suggesting the 70-day lag holds and Bitcoin's next rally could start around March 24. He added that the alternative scenario is based on a 107-day lag, points to April 30th as the potential breakout date. Now, keep in mind, when you hear leading indicator, which is what they're saying that M2 is, this is something that you can identify what the potential reaction is going to be on that number ahead of time. How can, like, I don't even know any other way to explain it. But basically, these are not 100%, but these are based on historical data on these charts and on the charting. There are definitely things that occurred during the pandemic, during 2020, that we saw when they were saying inflation is transitory. Well, technically, it is in the grand course of time, right? When you're talking about people's lives and livelihoods and being impacted by inflation, that's happening now. And so, yes, inflation was transitory, technically. But when they were saying it, that is when the inflation was occurring. Remember, all inflation data lags, and it doesn't just lag, it lags hard. And so if you're actually seeing the inflation occurring, you may not see the year-over-year changes, rising for quite a while. I mean, a 5% or 3% rise each month is pretty significant, but that's kind of in line with, or I should say per year is significant, but that's in line with what the Federal Reserve is expecting, right around 2% inflation. But when they were saying, "Oh, everything's inflation, it's transitory," the actual numbers were extremely high, but the inflation occurred previously. The inflation actually occurred the year before they were saying inflation is transitory. That's when all the prices were moving higher in 2021. And then 2022 is when we started to see the data and they were saying, oh, it's transitory, we're going to be over. So, yeah, these leading indicators, and there's also lagging indicators. What are lagging indicators? Indicators that we find out after the fact, right? Oh, unemployment is extremely high. Well, the unemployment data is not from now, it's from 3 months ago, right? So now unemployment may not be a problem. 3 months ago it was. That's a lagging indicator. We get the indicator after the effect of the indicator, if that makes sense. And so what they're saying is that as M2 expands, there is a lag, and these lags is putting kind of the historical data into this chart and showing that either we're going to have potential blast off at this March 24th date or the April 30th date. And yeah, it's going to be interesting to see if this occurs. I do think that, I mean, guys, the market, just based on like where the pricing is, it has not really moved that much. Obviously, portfolios are down substantially. Some people are down 50, 60, 70%, depending on what you invested in. But when we're talking about like the macro, Bitcoin is still basically at all-time record highs, just higher than where we were in the previous all-time record high, which was $70,000. We're still sitting above that. And so now the new all-time record high is $100,000. We're only about 15% away from that. And so I do think that people are more bearish than they should be on bullish. Obviously, we need to approach these markets with risk in mind and understanding this. But kind of moving into what we're talking about, I mean, we are literally at all-time record highs in terms of where the M2 money supply is, and it will continue to be this way, right? There will never be an extended period where we're going to see the M2 just below, because they have to keep printing more. The economy needs more to be printed. And when you look at the money supply, the velocity of money, you actually see that's decreasing. And not just that it's decreasing, we're at all-time record lows effectively. So the velocity of money is lower, but the actual supply of money is higher. Again, a lot of that is concentrated wealth in my view. So we'll keep an eye on this. M2 money supply is right here on the US debt clock, right towards the bottom of the page. And yeah, we were talking about the Ethereum ETF outflows. Spot Ethereum exchange traded funds have shed $370 million in assets over the past 12 trading days, notching their longest losing streak. Now, here's the deal. This is really not good for the price, but the way that I also look at it is because all of this money has outflowed away from the ETFs, it's sitting on the sidelines, right? It hasn't just been redeployed yet. I mean, where is it going? It's Solana? No way. Is it going into Bitcoin? Potentially, but I think that the money is there for Ethereum's ETFs. And whether they trade on the Ethereum price or not, that's a whole different story. But I don't think that the money moving out of the Ethereum ETFs is moving out permanently. I think it's just sitting on the sidelines waiting for kind of a signal that the market's going to reverse, because we could still potentially go another 50% drop, which would bring us to $1,000, right? The cycle low for Ethereum was $800. So it's potential that we're going to hit $800 or potentially lower than that. And I think that's where the sidelined ETFs are just kind of sitting and waiting to see what the Federal Reserve does, what happens with the M2 money supply, all of these different factors that could affect the overall macroeconomy negatively or positively. Personally, I think that we are due for a rally. I do think that this upcoming rally, whenever it is, maybe we're not going to have it for a few years, but if we have it this year in 2025, the next rally is the exit rally, in my view. I think that a lot of people are going to be looking for exit points, even if it's lower than what they originally thought, because there is a lot of bullish sentiment going on, but a lot of this is going to take a lot of time. I mean, look how many years just to get to this point. The SEC is earnest about finding a workable crypto policy, according to the commissioners of the SEC, stating this at a roundtable. The SEC is now actively working with the crypto industry to better apply securities laws to the sector. A dozen attorneys representing different aspects of the crypto industry weighed in during a panel discussion. NFTs may be the subject of the SEC's next staff statement. And again, I think the SEC is going to be making these statements of clarity. They've already done it for many of these exchanges and the lawsuits that they've dropped, and now we're starting to see the effects of that, right? Again, it doesn't happen immediately after. There's a little bit of a lag time. Now we're seeing the Treasury delisting crypto privacy tool from sanctions list. Effectively, they have removed Tornado Cash from the country's sanctions list. This happened during the previous administration. Treasury Secretary Janet Yellen did this. And this was kind of the response to the whole FTX ordeal and the Operation Choke Point really closing down and trying to kill the crypto ecosystem completely. I mean, that is literally what they were trying to do. And to see this change and the rapid changes that we're seeing be made just from a few people in government. Like, this is when they're talking about bureaucracy is the red tape that holds everything back. I mean, it was literally just Gary Gensler and Elizabeth Warren. Obviously, Elizabeth Warren is still a senator, but, you know, Gary Gensler is out. And we're seeing massive changes at the SEC, massive changes at the Treasury. So much so that Coinbase could be nearing a multi-billion-dollar deal for Deribit, which is a crypto derivative market platform. Now, I think it's important to take all of this into context and really understand kind of the bigger picture, which is what we like to do on this channel, really kind of deep dive into these investments and see, you know, from an investment perspective, like forget about the communities and the, you know, the maximalism. And, you know, I mean, there's people who like all they talk about is Tesla. Like for the last 10 years, all they've talked about is Tesla, Tesla, Tesla stock, Tesla stock, Tesla stock. And listen, like I'm not short Tesla. I'm not long Tesla. I'm just neutral Tesla. Like I wouldn't short it ever. I would never bet against Tesla because Tesla is dominant as the electric car company, right? They have a lot of the technology, a lot of advance on the technologies that a lot of other car makers are going to need. And so they're going to have to license it from Tesla. But anyway, I don't even know how we got to Tesla. That people have been talking about Tesla for 10 years, and this is the only thing that they could think about all day and all night. This is their whole job. It's just Tesla, Tesla, Tesla stock, Tesla stock, Tesla stock. And it's like, you know, I'm that is great and all that you love Tesla, but like there are other investments that are potentially performing better or are going to perform better or are going to have better fundamentals to really look at than just focusing on one stock for the rest of your life. I mean, I understand, but I also don't understand at the same time. I mean, look at Warren Buffett. Warren Buffett just sold his own real estate business, if I'm not mistaken. I think it was the real estate business. But he's not married to his bags either, and he's is in mid to late 90s. So yeah, I mean, you can't really marry your bags. You have to really understand kind of what the overall global macro is where it's moving. Now, Coinbase in this multi-billion-dollar potential deal for Deribit, this would expand Coinbase's footprint fairly rapidly, and we're seeing this. I mean, we heard Brian Armstrong, the CEO of Coinbase, just commit to hiring over 1,000 employees due to the administration's acceptance or changes to the sentiment about around crypto, right? Before they didn't even know if Coinbase, Coinbase was spending. I mean, Ripple said they spent about $250 million, $250 million on all their legal fees for the case against with the SEC. How much do you think Coinbase is spending? Probably close to that as well. And they're a publicly traded company. And as a customer of the company and also as a shareholder of the company, I find it absurd that a company like Coinbase would have to waste even $50 million, let alone $200 million on a frivolous lawsuit when Coinbase was trying to do the right thing with the SEC for years. And then the SEC used it against them and just sued them. Instead of giving them clarity, working with them to do the right thing and protect consumers, which is what they said they were going to do. So this is huge for Coinbase. And I'm surprised that we're starting to hear about these deals happening already. It doesn't surprise me that they're making these deals, but it surprises me how quick they're moving. And I think that this is another indicator of kind of the final hype cycle for this, this bull run. People are not even bullish, right? People are not even bullish. Why is this bullish? It's not that they're buying a company. It's that they're going to have derivative. Guys, what this tells me, well, first of all, let's read the article. Okay, let's understand a little bit more what's going on. So Coinbase is in advanced acquisition talks with the leading global derivative exchange, Deribit. According to the story, the companies have notified Dubai regulators about the discussions. So obviously, it's going to be for, potentially their global audience. But I want you guys to think about something in just a minute. Bloomberg reported that Deribit could have been valued at $4 to $5 billion. And so why is this important? Like, even if they're just doing this overseas, we have to remember Kraken, the other U.S. crypto exchange, just boosted their derivative business with a $1.5 billion deal to purchase NinjaTrader. On social media the other day, I kept seeing this, Kraken bought NinjaTrader. I'm like, who gives a shit? Like, who cares? And then when I saw this with Coinbase, I was like, oh, I get it. Kraken and Coinbase are both buying these derivative exchanges. Granted, they may be global derivative exchanges and not in the US. But what do you think when they go to the regulators in the US and say, hey, can we do this? We're literally in the rest of the world operating. Can we do it in the US? What do you think the regulators in this administration are going to say? They're probably going to say, okay, go for it. That's huge. That is huge, because what can happen literally overnight is all of these derivatives. Now, this could be positive or really negative. In my view, you guys know once derivatives are involved, which are layers on top of the underlying asset. So for instance, Bitcoin futures, Bitcoin options on futures, Bitcoin spreads, all of these layers on top of the underlying asset. These are called derivatives. And they're called derivatives because the underlying asset is supposed to derive value. Sorry, the derivatives are supposed to derive value from the underlying asset. But what has happened throughout the course of time is the underlying asset actually derives its value from the derivative. It's backwards. Now, why, you may say? Well, if we see Bitcoin futures, and by the way, the derivatives because they can impact the price of the underlying asset, the crypto or the stock or whatever it is, because they can impact it so much, what's even more interesting is the derivatives don't even have that much, they may not even have that much volume, and they can impact the price of Bitcoin. Bitcoin has $14 billion in volume in the last 24 hours. And a small trade on a very low volume derivative could potentially impact the price of Bitcoin. Here's why. So if you think about Bitcoin futures, that's what we're going to kind of use for this example. So if you take Bitcoin futures and, let's say people start trading in Bitcoin futures for Bitcoin, to hit $110,000, right? Even if it's low volume and low liquidity type of derivative, the rest of the market and the algorithms, they look at that and they're like, wait, why is somebody opening up a future or an option or whatever else, basically betting on the price is going to go up by, 20 or 25% to $110,000. Why are they doing that? And then you may see another trade for $125,000, right? And then the algorithms and people who are looking at the markets are like, wait, why is somebody opening up $125,000? And then people start to speculate. Oh, there's something else going on. Oh, we're going to have a pump. Oh, there's going to be news. Oh, there's going to be an announcement. There's going to be an integration. A country's buying. There's going to be speculation. And based on that speculation, that pushes the price of Bitcoin actually to go higher. And so obviously I'm oversimplifying how these derivatives work, but the derivatives can move the market. And so this could be a very good thing for the market. This can be a very bad thing for the market, right? Because you can go higher, or you can go lower. But the bottom line for me, when we're talking about, this video, you're not bullish. Coinbase is buying derivative exchange. Kraken is buying a derivative exchange. SEC is giving clarity to the crypto industry and working with the crypto industry. Treasury Department is doing the same. The White House is doing the same. 44% of people are bullish over crypto AI tokens as well. And why is this? Because right now, the issue with these AI companies is there's no real way to make money with them, right? Some of them make money, but they're not really cash flowing because they're putting more money into the infrastructure and the development than they're probably making, right? And so when we're talking about these AI cryptos, this is more of a global think tank building an ecosystem of this technology. It's very different. And so I think that's part of the reason, but also in crypto, there's a way to make money. And there's a way to make money trading. There's a way to make money, building within the ecosystems of crypto. So nearly half of crypto pundits in a recent survey are bullish over crypto AI token prices, which could bode well for the $23.6 billion crypto market sector. And by the way, this $23 billion, most of these are in unusable and no product-based AI tokens, right? They're just AI in name. Last cycle, we had what was called Dino or Dino, D-I-N-O, decentralized in name only, meaning these blockchains were saying, oh yeah, we're totally decentralized. We are 100% decentralized, which was complete bullshit. They were just decentralized in their name. In actuality, they were not decentralized at all. So those were called Dino coins. Like you could say like XRP, people say is a Dino coin, right? Dino coin, decentralized in name only. XRP is not really decentralized. But people say it is. So anyway, so these are AI in name only, right? They don't actually have a product. You guys know, based on my reporting, really there's two blockchains that have an actual product that is running AI on it. And that's Near Protocol and Internet Computer. And Near is not even anywhere near close to the Internet Computer technology. Filecoin maybe a little bit as well. But other than that, all the other coins in this $24 billion market of AI cryptos, most of them are trash. I mean, I don't think there's any other way to say it. Anyway, of the 2,600 respondents surveyed by CoinGecko between February and March, 25% were fully bullish and 19.3% indicated they were somewhat bullish for crypto AI tokens. Around 29% of them said they were neutral on the subject, while a combined 26.3% were either somewhat bearish or bearish. A lot of people are still bearish, guys. Or people are just not bullish, right? Neutral is like, well, I'm not bearish, I'm not bullish. I don't even know what we're doing right now in crypto. But again, we need to follow what is happening at a very high level here, because this is an indicator of where the markets are going. They may not go there today, they may not go there tomorrow, or even this year. But this is where they're going in the longer term. Bitcoin-focused Metaplanet appoints Eric Trump to advisory board. So you guys know Metaplanet is a Japanese company. They are on the OTC markets here in the US as well. Metaplanet right here. Market cap is 185 billion Japanese yen, which is about 1.2 billion US dollars. Now keep in mind, this company is highly overvalued in my view. Highly, highly overvalued. That doesn't mean they are overvalued. It's just my opinion is that they are overvalued. And you can see here when they started really the Bitcoin strategy, you can see the price was basically just under 1,000 Japanese yen, and now it's almost 5,000 Japanese yen. So a 5x, and it went up all the way to basically almost a 7x. Just in the last few months, right? In the last year, this has happened with Metaplanet. Well, now we're seeing that they are basically naming Eric Trump to their advisory board. So he will assist the company in advancing its mission to expand its Bitcoin treasury. They said Eric Trump brings a wealth of experience in real estate finance, brand development, and strategic business growth, and has become a leading voice in an advocate of digital asset adoption worldwide. The company announced its Bitcoin accumulation strategy last year and set a goal of 10,000 Bitcoin by the end of 2025. With their most recent purchase this past week, the company currently holds 3,200 Bitcoin. This makes the company the world's 10th largest corporate holder, while Michael Saylor remains in the top spot with about 500,000 Bitcoin. And so Eric Trump, remember, he's also an ambassador to the World Liberty Finance, which is basically a company, crypto portfolio that holds crypto. We've talked about it quite often on this channel. And the president listed him on the website as the chief crypto advocate. And so, yeah, we'll see what happens with this. I mean, I don't really know that Metaplanet is investable from a stock perspective. Like I said during previous videos, guys, like we're in the bull market, right? And the strategy that Michael Saylor is pushing out, nobody is trying except Metaplanet, right? This is a different company. Why they're doing it, I don't know. What their whole business, what their business is, I don't even know. But most companies, right? One company doing does not. Oh, companies are adopting the strategy. No, guys. No companies are adopting the MicroStrategy strategy for Bitcoin, because what they're doing here, Metaplanet, they announced this last year at the beginning of the bull market, during the halving or right after the halving, and now they want to get to 10,000 Bitcoin during a bull market. During all-time record highs. Michael Saylor buying hundreds of millions of dollars in Bitcoin at all-time record highs. The price comes down 20%, and he buys $10 million. Like, I don't know. To me, this is a very risky strategy. Buying through a bull market, instead of saying we're gonna save as much cash as possible, so that during the next bear market we're gonna buy up all the Bitcoin that we possibly can. Instead of saying that, they're like, nope, we're gonna buy the all-time record highs through the bull market, and we want to have 10,000 Bitcoin by the end of the bull market. Listen, this is a great strategy for long-term holds, but it's also very risky, because in a bear market, we could go down fairly substantially under dollar cost average and their buy-in price. And this could cause massive issues, especially with publicly traded companies. Now, this is in Japan. Is that going to affect the US? I don't know. But is it going to affect the stock price? Probably. So right now, I would say, for me, can't invest in it. But in a bear market, this may be a great opportunity, especially depending on what they do with the Bitcoin in a bear market. But we'll see. In my view, you're probably not bullish enough, because there is a lot of bullish things happening in the markets. There's a lot of bullish sentiment. There's a lot of bullish indicators that we just talked about, a lot of those, at least 10 indicator points that show how bullish we should be about the crypto market, especially in the medium term. Will we enter another bear market? Absolutely, in my view. But are we there yet? I don't think we are just yet. There's too many bullish things going on at the same time, and we haven't seen the market reflect that. And so in my view, everything we're seeing that is bullish. These are leading indicators right now. And so you can either lead those indicators and make those decisions in your portfolio, or you can lag and start buying afterwards, which is what it seems like these Ethereum and Bitcoin ETF investors are doing, because they haven't bought back in fully yet from the hundreds of billions or billions of dollars that they've outflowed from the Bitcoin and Ethereum ETFs. And they're the big money, and I like to follow what the big money does. Anyway, nothing I say in the video is financial advice. Give the video a free thumbs up. I'll see you guys when I see you. Crypto on.